Welcome to the Deep Dive. Today we're tackling a topic that just never seems to sit still, the U.S. housing market.
Definitely.
For years, it felt like all we heard about were those crazy bidding wars, prices just shooting up, and, well, nowhere near enough homes for sale.
Yeah, that crippling lack of inventory.
Exactly. But, if you've been watching closely, it feels like something fundamental is starting to shift.
That's precisely it. And that's what we're diving into today, housing inventory. Basically, the number of homes actually listed for sale across the country.
We're going to unpack how it's changing, maybe why it's changing.
And what that means for you, whether you're thinking of buying or selling. We'll dig into the latest data, see what's really happening with market dynamics.
Right. So our mission, as always, is to sift through a whole bunch of sources. We've got insights from places like ResiClub, Realtor.com, Zillow, Forbes.
And even pulling in some real-world takes from Reddit conversations, which can be pretty revealing.
Yeah, definitely. We want to distill all that down into the key takeaways for you. Think of this as your shortcut to understanding the forces shaping housing today without getting totally buried in numbers.
Hopefully a few aha moments along the way.
Let's hope so. So let's start big picture. What's the main story nationally? Because it really does feel different.
It is quite a change. For what felt like forever, the story was super tight supply, almost nothing available.
Right.
But now the data's showing something else. National active listings. They're up significantly year over year.
How significant are we talking?
Well, take Realtor.com data. Between October 2023 and October 2024, they saw a 29% jump. That's nearly 954,000 active listings.
Wow, 29%. That's a big move.
It really is, and it shows the sustained return of supply. We even hit a milestone back in May 2025.
Oh, yeah. What was that?
According to Realtor.com, U.S. active inventory actually crossed 1 million homes for the first time since, winter 2019.
Okay, hitting a million. That feels psychologically important, too.
It does, and Zillow's data backs this up. June 2025, they showed 1.36 million active listings. That's the most since November 2019, and up over 17% from the year before.
So more homes hitting the market, staying on the market. Sounds like purely good news for buyers, finally.
It is good news, definitely. More choice is always better for buyers. But we need a little context here.
Okay, what's the catch?
No real catch, just perspective. Even with these big increases, nationally, inventory is still hovering, roughly 20% below where it was before the pandemic frenzy.
Okay, so better, but not quite back to normal, whatever normal was back then.
Exactly. ResiClub pegs it at about 21% below October 2019 levels. Zillow says for June, we're still about 20.6% below the pre-pandemic average. So improving fast, yes. Fully recovered, not quite, nationally speaking.
That's a really important distinction. So how does this shift, even if it's not a full recovery, change the game?
Yeah.
The power balance between buyers and sellers?
Well, the basic economics are pretty clear, right?
Yeah.
Generally, when you see active listings go up, and especially when homes start sitting on the market longer,
Yeah.
that usually points towards potential future price weakness, or at least less rapid price growth.
And the opposite is true. Fewer listings means prices go up.
Typically, yeah. A rapid drop in listings often means the market's heating up, sellers have the advantage, prices rise. So what we're seeing now is inventory climbing.
Meaning buyers get more power.
Bingo. More inventory means more choices. That shifts the negotiating power towards buyers. Sellers have to compete more, homes might take longer to sell, and you start seeing potential price cuts.
Okay, so the pendulum is swinging back a bit from that intense seller's market we saw.
It definitely seems to be moving in that direction. Less frenzy, more breathing room for buyers.
Now, that's the national view. But housing is always so local, isn't it? Where are these shifts really popping?
Hugely local. And yeah, we're seeing a much stronger inventory comeback in certain states. As of October 2024, 8 states were actually back to, or even above, their pre-pandemic 2019 inventory levels.
8 states already. Which ones are those?
We're talking Arizona, Colorado, Florida, Idaho, Oklahoma, Tennessee, Texas, and Utah.
Interesting. A lot of Sun Belt and Mountain West states in there.
Exactly. And the next likely candidates to join that list, probably Alabama, Oregon, and Washington.
So why them? Why are those Sunbelt and Mountain West markets snapping back faster inventory-wise than, say, the Northeast or the Midwest?
Well, there are a couple of big reasons. First, many of those areas saw even more extreme home price growth during the pandemic boom. Prices got really stretched compared to local incomes.
Right, affordability just got crushed.
Totally. So when pandemic migration slowed down and mortgage rates shot up, it hit those markets harder. Places like, Austin or Colorado Springs really felt it.
Okay, that makes sense. What else?
The other big factor is new construction. A lot of these Sunbelt and Mountain West regions just build more new homes compared to the Northeast and Midwest.
Ah, so more new supply coming online helps cool things down.
Precisely. It adds options, takes pressure off the resale market. Plus, builders in those areas have been pretty active using things like mortgage rate buydowns to make their homes more affordable and keep sales moving.
Right, those builder incentives we keep hearing about. Let's zoom in on some specifics. Florida keeps coming up. Huge inventory jumps there, right? And not just in the hurricane-hit areas.
Yeah, Florida's a really interesting case. The inventory surge started in Southwest Florida, places like Cape Coral, Fort Myers, partly due to Hurricane Ian impacts. But now it's much broader. Jacksonville, Orlando, even parts of the Atlantic coast are seeing big increases.
Why the big jump across the state?
It's kind of a perfect storm down there. You've got lingering effects from new condo regulations after the Surfside collapse.
Right.
You've got the slowdown in that remote work migration that fueled so much growth.
Mm.
And then the really big one lately, massive shocks to home insurance costs.
Oh yeah, I've heard horror stories about Florida insurance.
We saw a Reddit user mention their premiums tripled, said they were even thinking about self-insuring. When costs like that pile up, it definitely pushes some people to list their homes.
Wow. Okay, what about elsewhere? Pacific Northwest. We hear a lot from listeners there.
Yeah, the PNW is definitely seeing changes. Lots of Reddit users chiming in from Seattle, Spokane, Southwest Washington. They're seeing inventory spike.
Back to pre-pandemic levels in some spots.
Some users are saying exactly that for places like Seattle. And statewide in Washington, July 2024 data showed active listings up almost 38% year over year. Get this, 25 out of 26 counties saw double-digit increases.
That's widespread. Any other hotspots from those Reddit conversations?
Yeah, someone in Columbia, South Carolina mentioned a huge uptick in inventory, especially out in the suburbs, but even downtown. So their street alone had like 6 or 7 homes for sale recently. Shows how quickly things can shift block by block.
In California. Always a big market, always complicated.
Always complicated is right. It's a mixed bag based on user reports. Some areas are seeing big increases, definitely. But then you have someone in Orange County saying inventory there is still only like 40% of what it was pre-COVID.
So still really tight in some desirable spots.
Seems like it. And another user pointed out that even with local increases, California's overall inventory, maybe around 57,000 listings recently, is still way below its old norm of maybe 80,000. So progress, but from a very low base.
It really hammers home that location, location, location thing, even down to the neighborhood level.
Absolutely. You see it in Phoenix, too. One user reports a 60% year-over-year jump, but another says things felt pretty flat for most of 2024. Depends where you are, depends when you look. Realtor.com also flagged Denver and Tampa as having notable inventory growth.
Okay, so inventory is clearly rising in many places. But why exactly? Is it just a flood of people deciding to sell all of a sudden?
That's the key question, and the data suggests no, not really.
No.
It's crucial to understand. Active listings are rising mostly because demand has cooled and homes are just taking longer to sell. It's not primarily driven by a huge surge of new listings hitting the market.
Ah, okay. So it's more about the pace of sales slowing down.
Exactly. National new listings actually remain pretty suppressed, according to ResiClub and Forbes. Homes listed are just sitting there longer before going under contract.
Which brings us to the lock-in effect, right? People have these amazing low mortgage rates from a few years ago.
Yeah, those high 2% to 4% rates.
And they just don't want to give them up to buy something else at today's rates, which are, what, around 7%?
Right. The average 30-year fix was about 7.09% in October 2024. That's a huge deterrent. And that rate lock is definitely still a factor, no question.
But is it the dominant factor keeping supply low? Is it getting weaker?
It's still a significant concern, but yeah, it seems to be becoming less of an issue over time. Redfin data showed about 83% of homeowners had rates below 6% recently. That's still a lot, but it's down from almost 93% back in mid-2022.
So some people are moving regardless.
Exactly, because for most people, the decision to sell isn't just about the rate. It's driven by major life events, a job change, getting married, divorce, needing more space, downsizing, unfortunately, maybe a death in the family.
Life happens.
Life happens, and often the need to move for those reasons outweighs the pain of taking on a higher mortgage rate.
Okay, so it's less about new sellers flooding the market and more about buyers pulling back because things are just too expensive.
That's the biggest piece of the puzzle, really. Strained affordability.
It just costs too much to buy and own a home now.
Precisely. You've got the combination of still high home prices and those elevated mortgage rates. It's sidelining a lot of potential buyers.
Give us a sense of the scale. How much harder is it now?
Well, think about this. A typical home priced around $431,000 in April 2025. To afford that, you'd need an annual income of roughly $114,000.
Wow, okay. How does that compare?
That's almost $47,000 more income than you would have needed for the typical home back in 2019.
$47,000 more.
Hmm.
Just in 5 or 6 years. That's staggering.
It really puts the affordability crunch into perspective. And even small changes in rates don't help as much as you'd think because the starting price is so high. Forbes compared typical payments. May 2025 was maybe $1,936 a month, only $12 cheaper than May 2024, even though rates had dipped slightly.
So the overall cost barrier is just huge for a lot of people.
It really is.
Okay, so if buyers are sidelined and homes are sitting longer, this has to be impacting how people feel about the market, right? What's the sentiment out there?
Yeah, you definitely see it in the consumer sentiment data. Fannie Mae does this Home Purchase Sentiment Index, the HPSI. In June 2025, it dropped down to 69.8.
Is that low? What does it mean?
It indicates quite a bit of pessimism, actually. Only 28% of the people they surveyed felt it was a good time to buy a home.
Only 28%. Wow. What about the rest?
A whopping 71% felt it was a bad time to buy.
71% think it's a bad time. Why such widespread gloom?
Well, according to Mortgage Point, it's linked to...
So broader economic anxieties are playing a role too.
Definitely. Consumer confidence overall took a dip in June 2025. People were worried about the economy, the job market, even things like tariffs. It just makes folks hesitant to make huge financial moves like buying a house.
Okay, so buyers are feeling pessimistic. But are there concrete signs that the market is actually rebalancing beyond just feelings?
Oh, yeah, absolutely. Look at Zillow's Market Heat Index for June 2025. It showed the U.S. overall, plus 22 of the 50 biggest metro areas are now considered neutral.
Neutral. What does that mean in practical terms?
It basically means buyer and sellers have roughly equal negotiating power. It's not strongly tilted one way or the other.
And that's a big change.
Huge! That's nearly triple the number of neutral markets compared to just a year earlier. It really signals a significant shift away from that heavily seller-favored dynamic we had.
Okay, more balanced power. What else? Home sitting longer.
Yes, definitely. Zillow reported listings sold in a median of 19 days in June 2025. Compare that to 15 days the year before and just 11 days back in 2023.
So an extra week or more on the market on average.
Exactly. And Realtor.com had similar findings. 51 median days on market in May 2025, which was 6 days longer than the previous year. That extra time gives buyers more breathing room, less pressure, more chance to negotiate.
So if homes are sitting longer and buyers have more leverage, are sellers finally starting to adjust their expectations? Are we seeing price cuts?
We absolutely are. And it's not just anecdotal anymore. The data is showing a significant trend.
Okay, tell me about the price cuts.
Get this. In June 2025, a record 26.6% of home listings on Zillow had a price drop. That's the highest share for any June since they started tracking back in at least 2018.
A record. Over a quarter of listings cutting prices in June.
Yeah. And even back in April 2025, Mortgage Professional reported 18% of listings had price reductions. That was the highest April figure since 2016.
So this isn't just a blip. Sellers are really having to rethink their pricing strategies.
They are. The negotiation landscape is fundamentally changing. Buyers are seeing more opportunities to get a better deal.
What about builders? Are they feeling the pinch too?
Oh, definitely. You can see it clearly in builder confidence numbers. The NAHB Wells Fargo Housing Market Index, basically a measure of builder optimism, it dropped down to 32 in June 2025.
32. How low is that?
That's really low.
Yeah.
It's getting close to the lows we saw during the peak of the pandemic uncertainty. Builders are clearly less optimistic about sales.
So how are they responding? Are they cutting prices too?
They are. In June, a remarkable 37% of builders reported cutting their prices. That's the highest percentage since the NAHB started tracking that specific data point in 2022.
Wow, over a third of builders cutting prices. By how much?
The average price reduction was about 5%. And again, you hear this reflected on places like Reddit. Users are talking about seeing big price cuts on existing homes, too. Homes sitting for ages, sellers offering concessions like help with closing costs.
Right.
Some people even think sellers who bought right at the peak, maybe in 2021 or 2022, might now be facing short sales, selling for less than they owe just to get out because they're worried the market might drop further.
That's a tough spot for those sellers.
Yeah.
Okay, let's broaden out slightly. Beyond existing homes, what about new construction trends and foreclosures? How do they fit into this picture?
Well, on the new construction front, there was a notable dip. New home sales dropped significantly in May 2025, down almost 14% from the previous month and over 6% from the year before.
So fewer new homes being sold. Does that mean fewer being built too?
It seems so. Single-family housing starts also declined. So if that trend holds, buyers might actually face a smaller selection of brand new homes down the line, which could, ironically, tighten supply again eventually.
Okay. Something to watch. Now, foreclosures, that word always gets people nervous. Are we seeing a big spike? Is it 2008 all over again?
Okay, let's break that down carefully. Yes, foreclosure activity is up. Foreclosure starts increased 8% year over year in May 2025. And completed foreclosures, REOs, bank-owned properties, these surged 34% year over year.
Whoa, 34% jump in completed foreclosures. That sounds alarming.
It does sound like a big number, and it's certainly something to monitor. And this is a really important, but overall foreclosure activity is still historically low.
Low compared to when?
Way below the levels we saw just before the pandemic in 2019, and absolutely nowhere near the crisis levels of the 2008-2010 peak. We're not seeing that kind of widespread distress.
Okay, so not a 2008 repeat. Why not? What's different this time? What's stopping a wave of foreclosures?
The single biggest difference is home equity. Homeowners today are sitting on an absolutely unprecedented amount of it.
How much are we talking?
Total homeowner equity was over $34.7 trillion with a T in the first quarter of 2025.
Trillion. Okay, so people have a lot of value built up in their homes. How does that help?
It provides a massive buffer. If someone gets into financial trouble and starts missing mortgage payments, most homeowners have enough equity to sell their house, pay off the mortgage, and usually still walk away with some cash. Or they can tap into that equity through loans or lines of credit to get caught up.
So they have options other than just letting the bank take the house.
Exactly. That equity acts as a huge safety net, preventing the kind of forced selling and foreclosure crisis we saw back in the day.
Okay, that's reassuring context. So putting this all together, rising inventory, slowing sales, price cuts, but still high prices and rates, low but rising foreclosures. The big question for listeners, is 2025 actually a good year to buy a home? Should you jump in or wait and see?
Yeah, that's the million-dollar question, isn't it? And, the consistent advice from housing experts is pretty clear. Trying to time the housing market perfectly, it's almost impossible.
Don't try to catch a falling knife, as they say.
Something like that. The general consensus is that the best time for you to buy is when you find a home you actually like, one that fits your needs now and for the foreseeable future.
And crucially,
One that you can genuinely afford without stretching yourself too thin. It's more about your personal situation and financial readiness than trying to guess the absolute bottom of the market.
that makes sense. Focus on what you can control, your budget, your needs.
Yeah.
And getting onto that housing ladder, starting to build equity,
Yeah.
that's still valuable, right?
Absolutely. Owning a home remains one of the primary ways people build long-term wealth and net worth. So getting started when it makes sense for you is key.
Okay, so for buyers who are thinking now might be their time, what are some pro tips?
First and foremost, know your budget inside and out, but don't just focus on the sticker price of the house. Really dig into the monthly payment.
The PITI principle, interest, taxes, insurance.
Exactly. Price, down payment, mortgage rate, loan term, property taxes, homeowners insurance, maybe even HOA fees. Understand the total ongoing cost. That monthly payment is what really impacts your lifestyle.
Good point. What else?
Be flexible. Maybe you can't get the perfect house in the perfect neighborhood right away. Could a slightly smaller home work in that ideal location? Or maybe a larger home a little further out. Explore different options.
Don't get locked into just one vision.
Right. Also, really watch your specific local market. Pay attention to how much inventory is available, what prices are doing, how quickly homes are selling in the areas you like. That local knowledge gives you confidence.
Okay. And emotionally, it can be draining.
It can be, so try not to get discouraged. Approach it with good information and realistic expectations. And definitely get pre-approved for a mortgage early on.
Why is pre-approval so important?
Two big reasons. One, it tells you exactly how much you can realistically borrow, so you know your true budget. Two, it shows sellers you're a serious qualified buyer, which makes your offer much stronger, especially now that sellers might be looking at multiple offers again in some cases, or just want certainty.
Good tips for buyers. Now, flip side, what about sellers? They might be feeling a bit nervous seeing the market shift. What should they be doing?
Yeah, sellers need to adjust their strategy too. First, do your homework on pricing. Really research recent comparable sales comps in your immediate area.
Right.
Understand what your competition looks like.
No more just naming a crazy price and expecting a bidding war.
Probably not in most markets. You need up-to-date pricing intelligence. Be realistic. You might also need to be prepared to negotiate more or offer concessions that weren't necessary a year or two ago.
Okay, realistic pricing. What else?
Make sure your home presents well. It needs to be in top-notch shape. Fix the little things. Maybe a fresh coat of paint definitely boosts that curb appeal.
First impressions matter, especially with online photos.
Hugely. So many buyers start their search online. Your photos need to grab them. A well-maintained home stands out.
And working with an agent, still crucial.
More crucial than ever, I'd say, in a shifting market. A good local agent brings market knowledge, has a marketing plan, gets your home listed on all the key portals, and can help you navigate offers and negotiations.
Right. Experience matters.
Definitely. And finally, for sellers, address any known issues beforehand. If the roof is old or the HVAC is on its last legs, consider repairing or replacing it, or at least getting quotes so you can disclose it properly and maybe offer a credit. Removing buyer objections up front makes the selling process smoother.
Solid advice for both sides. So wrapping this up, we've really dug into these shifting currents in the housing market.
Yeah, we've seen inventory rising nationally, though it's still below those pre-pandemic levels.
And we've seen how different things look, region by region, state by state, even neighborhood by neighborhood.
It's clear the market's transitioning, moving away from that extreme seller's market towards something more balanced.
Which is bringing back some options, a bit more negotiating power for buyers. But those big challenges, affordability, high prices, high rates, they haven't gone away.
Not at all. They're still very much present.
So as we see inventory climbs, maybe getting closer to what used to be normal.
Yeah.
It does make you wonder, doesn't it?
Wonder what?
Well, what does a balanced market even mean anymore? Home prices nationally are up, nearly 50% in just the last 5 years?
Yeah, a huge run-up.
Plus, property taxes have gone up in most places, and we talked about homeowners insurance premiums surged like 24% between 2020 and 2024.
Right. The total cost of ownership has fundamentally changed.
Exactly. So, will this new normal of higher inventory, maybe a more balanced negotiation dynamic, will it truly make homeownership more accessible again? Or does that fundamental affordability hurdle just remain, maybe with slightly more houses to choose from?
That's the big question, isn't it? Is it just a repackaging of the same affordability challenge or a genuine opening? Something for all of us, especially potential buyers and sellers, to really think about as we navigate the market ahead.